Hello there. Now, what if I told you there's a £35 billion hole in the UK's budget every single year? You'd probably think it's all down to these giant corporations hiding money offshore, right? Well, a huge slice of that actually comes from everyday people making simple but very costly mistakes on their tax returns. Today, we're going to pull back the curtain on the most ignored pages of the self-assessment form. This entire breakdown was put together by the expert tax advisors at Pro Tax Accountant. They see the consequences of these small omissions day in, day out, and they're here to help you steer clear of them.
Right, let's just look at that number again, because it's staggering. £35 billion. That's the official estimate of the UK's annual tax gap. I mean, that's a colossal amount of money that should be funding our public services, our hospitals, our schools, our roads. So the big question is, where on earth is it all going?
When you hear a number that massive, your mind instantly leaps to, well, elaborate schemes, doesn't it? Hidden accounts in some exotic, sunny location, and really clever corporate accounting. And, sure, that is part of the story, but it is not the whole picture, not by a long shot. The real and, frankly, surprising answer is much, much closer to home for millions of us. The truth is, a massive chunk of that missing tax comes from people who would never, ever dream of breaking the law. We're talking about the freelancer in London who maybe sold a bit of crypto, or the cafe owner in Manchester who rents out the flat upstairs, or even the retiree in Birmingham with a small savings account over in Spain. They're not criminals. They just make mistakes. Or, more often than not, they don't even realize they need to fill in these extra pages on their tax return. It's a problem of ignored forms and, well, hidden complexity.
So, let's meet the main culprits, shall we? These aren't just bits of paper or boxes on a screen. Think of them as the hidden traps in the self-assessment system. These are the supplementary pages where millions and millions of pounds in tax liabilities are either miscalculated or just missed entirely. This is the part that catches so many well-meaning people out.
Let's have a look at this rogues gallery of ignored forms, because honestly, each one is a potential landmine. You've got the SA 109 for residents, absolutely critical for the expat in Dubai who thinks they've left UK tax behind. Get this wrong, and HMRC might just disagree. Then there's the SA 106 for foreign income. This is for anyone with overseas interests. Could be a rental property, dividends from some foreign shares, or even that tiny savings account you still have from that year you worked abroad. Then the big one, the SA 108 for capital gains, now more important than ever since the tax-free allowance has been slashed. And finally, the SA 105 for the UK's nearly 3 million landlords. See, these aren't just forms, they're the forgotten chapters of your financial story.
But why? Why are these forms so often missed? It's really easy to just blame carelessness, but the reality is so much more complicated. The system itself has some pretty deep flaws, and our own minds can play tricks on us. So let's break down how perfectly well-intentioned people get led into making some very, very expensive mistakes. This is where it gets really interesting.
Okay, just look at this slide for a moment. It shows a glaring, frankly unbelievable contradiction. If you live abroad and you need to tell HMRC you're non-resident, you absolutely must file Form SA 109. But here's the trap. HMRC's own free online filing software doesn't let you submit it. I'll say that again. The official government portal, the one you're actively encouraged to use, physically prevents you from filing a mandatory form. It's a digital black hole. If you use it, the system just defaults to treating you as a full UK resident, which means it assumes you owe UK tax on every single penny you earn anywhere in the world. It's a catastrophic mistake, and it's hardwired into the very system designed to help you.
And this just brilliantly illustrates the mind traps that we all fall into. The PAE autopilot, that's a huge one. Millions of us are employed, our tax comes off our payslip, and we just assume, great, my job's done. But what about those shares you sold, or that side hustle you started? The PAE system knows nothing about that. Then there's the taxed abroad fallacy, a perfectly logical but dangerously wrong assumption. You think, well, I've paid tax in Spain on my Spanish rental income, so HMRC doesn't need to know. Wrong, they do. And finally, default bias links directly back to that software flaw. Our brains are just wired to think, well, if the official tool doesn't ask for it, it can't be that important, can it?
Now, you might be thinking you could get away with these little omissions. And maybe 10 or even 5 years ago, you might have. But today, HMRC has some incredibly powerful tools at its disposal. The days of being financially invisible are well and truly over. Stay with me. This next point affects anyone with even the smallest overseas interest. Meet HMRC's digital detective. It's called Connect, and it is a data-crunching behemoth.
Picture a digital spider's web with threads reaching into every single corner of your financial life. It hoovers up information from your UK bank, your letting agent, that crypto exchange you used once, and, this is the crucial bit, data that is automatically shared by tax authorities in over 100 other countries. So, if you earn interest in a bank account in France, HMRC knows. If you sold shares on a US platform, HMRC knows. Connect is designed to do just one thing: spot a mismatch between the data it holds and what you've put on your tax return.
And this is how it usually plays out. First, the Connect algorithm flags a little discrepancy. It sees you've received rental income from a letting agent, but wait, you haven't filed an SA 105 property page. Step 2, the nudge letter. That brown envelope lands on your doormat and your heart sinks a little bit. It's not a formal investigation just yet, it's more like a warning shot, a polite but firm tap on the shoulder asking you to please check your affairs. But if you ignore that nudge, step 3 is the formal inquiry, and that is a much more stressful, much more invasive, and much more expensive process.
And here it is. This is the exact sort of wording you might see. It sounds polite, but the message is crystal clear. Notice that very careful phrasing, "we have information." This is not a fishing expedition. This is a statement of fact. They aren't guessing, they already have the data, they are holding all the cards, and they are basically giving you one last chance to come forward and correct the record before things get much, much more serious. Getting a letter like this is a really critical moment.
So what happens if you do get it wrong, either by an honest mistake or by ignoring that tap on the shoulder? Well, that's when you walk straight into the penalty minefield. And trust me, these mines are very real. We're not just talking about paying the tax you owe anymore. We're talking about a complex system of penalties that can multiply your bills several times over.
Right, let's start with the basics. These are the penalties just for filing your return late. And here's the crucial point that catches so many people out. That initial £100 penalty applies even if you have no tax to pay. Even if you are due a refund, it's a penalty for missing the deadline, pure and simple. And as you can see, those costs quickly start to escalate into the thousands just for being late with the paperwork.
But this is where the real damage is done. Inaccuracy penalties are based on why you got it wrong, on your behavior. If HMRC decides your mistake was careless, maybe you just forgot to include interest from a savings account, the penalty can be up to 30% of the unpaid tax. If they think it was deliberate, so you knew about it but just hoped they wouldn't notice, that jumps to 70%. And if the error involves offshore income that you deliberately tried to hide, the penalty can be a staggering 200% of the tax owed. This is how a small tax mistake can snowball into a truly life-changing bill.
Okay, so that's the problem in the risks. It's a bit scary, I know, but how do you avoid these traps? The good news is you absolutely can. Let's break this down into some clear, actionable steps for the groups most at risk, drawing on the expertise of the team at ProTax Accountant. Okay, for all you landlords out there, here's your checklist for the SA 105. First, declare all your income. That means rent, any service fees, even non-refundable deposits. Second, claim all the allowable expenses you can. Repairs, insurance, agent fees, it all adds up. Third, and this is a big one, remember that mortgage interest relief has changed. It's now a 20% tax credit, not a full deduction from your income. And finally, get your digital records in order now. Making Tax Digital is coming for landlords in 2026, so that shoebox of receipts just won't cut it for much longer.
For investors, look, the game has completely changed. The capital gains tax allowance has been slashed to just £3,000. This brings hundreds of thousands more people into the CGT net. And you'll want to hear this part. The 2024/25 tax return has new, specific boxes just for crypto assets, which tells you exactly where HMRC's focus is right now. And please remember this crucial rule. Even if your gain is under the $3,000 allowance, if the total amount you sold the assets for was over £50,000, you still have to report it. They want to see the whole picture, not just the tiny taxable slice.
Now, if you have any overseas interests at all, listen up. First, UK residents are taxed on their worldwide income. You have to declare it all. Simple as that. Second, use Form SA 106 to claim foreign tax credit relief. That's how you avoid being taxed twice on the same income. Third, and this is absolutely critical, if you need to file the SA 109 for your residency status, do not use the free HMRC website. It will not work. You have to use commercial software or an agent. And finally, be aware of the new FIG regime from April 2025. This replaces the old, very complex non-dom rules with a simpler 4-year window for new arrivals where they won't pay UK tax on their foreign income. It's a huge change.
And here's a fantastic pro tip from the experts.
So many people put off their tax return until the last minute because they're fearing a big bill. But filing early doesn't change the payment deadline. That's still the 31st of January. What filing early does do is give you certainty. It is the difference between spending your Christmas worrying about a tax deadline and having it all filed and done in September, knowing exactly where you stand and being able to plan properly. It just gives you peace of mind.
So, as we wrap up, I'll just leave you with this one question. Think about your own financial life for a second. Do you have a small rental property, a few investments knocking about, an old overseas bank account left over from when you worked abroad? Are you absolutely 100% certain that your last tax return told the whole story? Because as we've seen today, one little overlooked form isn't just a bit of missed paperwork. It could be a multi-thousand-pound mistake just waiting for that nudge letter to arrive.
Of course, it's really important to remember that everything we've talked about today is for general guidance. Tax law is incredibly complex and it's always changing. For advice that is specifically tailored to your personal situation or your business, you should always consult with a qualified professional.
If anything we've covered today has raised a few questions, or if you're just not 100% sure about your own tax affairs, honestly, the best thing you can do is seek some expert help. The team at Pro Tax Accountant are specialists in this area. They can help you take control, make sure you're compliant, and give you that crucial peace of mind. You can reach them on WhatsApp, phone, or email, or you can visit their website for more information.
And finally, if you found this breakdown useful, please don't forget to subscribe to the Pro Tax Accountant YouTube channel. They regularly post essential insights that can really help you navigate the complexities of the UK tax system. Thank you so much for your time.